Welcome to today's market report.
US shares slipped on Tuesday in choppy trade as investors awaited for businesses to report how rising prices have hit their latest earnings. While bond yields spiked and the dollar shone on bets that monetary policy will soon be tightened. Indeed, two US Federal Reserve policymakers said on Tuesday that the central bank has kept pace with a planned move to reduce its bond buying program, cementing expectations that the Fed will start withdrawing its crisis-era stimulus as soon as next month. Soaring oil prices largely held on to recent gains, while US stock indices vacillated repeatedly between modest gains and losses before a flurry of those third-quarter bank earnings reports from Wall Street on Wednesday and Thursday. After watching oil prices steadily gallop higher in the past 18 months, many investors now worry that rising prices are exacerbating supply bottlenecks, weighing on businesses and creeping economic growth. Coal prices are at a record peak, and while gas prices are of recent highs, they remain 4 times higher in Europe than at the start of the year. The impact of supply crunches in power and manufacturing components is showing up in data. Figures on Tuesday showed Japanese wholesale inflation hit 13-year highs last month, British shoppers slashed spending. China recorded a 20% drop in car sales, and bottleneck dragged German economic sentiment down for a 5th month. We're in a sort of a holding pattern until we see the results, said Peter Kenny, founder of Strategic Board Solutions LLC. We're seeing some downgrades on US growth, and the impact on businesses will be in the thing to watch. The Dow Jones fell 0.34%, S&P lost 0.24%, Nasdaq dropped 0.14%, Pan-European Stock 600 Index lost 0.07%, and MSCI scheduled stocks across the globe shed 0.31%. Oil prices were almost steady. US crude was little changed at $80.50 per barrel, while Brent crude rose above $84 per barrel briefly before shedding 0.5% at $83.27 per barrel. With business hit by persistent supply chain disruptions and inflation pressures, the International Monetary Fund warned on Tuesday that the global economic recovery from the COVID-19 pandemic is being constrained and cut growth outlook for the United States and other major industrial powers. Given rising expectations that accelerating inflation will prompt central banks such as the Fed to rein in ultra-loose policies, benchmark bond yields rose in anticipation of tighter monetary conditions. 2-year Treasury yields, which have climbed as much as 100 basis points in October alone, jumped to 0.3419%, a level last seen in March 2020. In keeping with concerns that soaring prices could crimp economic activity and prompt central banks to raise interest rates down the road, the yield curve flattened and benchmark 10-year yields retreated to 1.5751% from 1.605% late on Friday. All those concerns, along rising Treasury yields, supported demand for the dollar. The dollar index stayed at 1-year highs and stood near a 3-year peak against the yen. The dollar index rose 0.149%, and a stronger dollar nudged the euro down 0.27% to $1.1526. The Japanese yen weakened 0.31% versus the greenback to 113.62 per dollar. The British pound has remained fairly firm in October, supported by expectations that the Bank of England will lead the rest of major central banks in raising interest rates after the COVID-19 crisis. Some market sources are anticipating an interest rate hike early next year, with other hikes to follow in an attempt to tackle inflationary pressures. Furthermore, the euro remains on the defensive on rising concerns about inflationary pressures and the supply bottlenecks fraughting the post-pandemic recovery. The macroeconomic docket has supported these fears on Tuesday, with German Zoo Economic Sentiment Index deteriorating for the 5th consecutive month, according to Commerzbank. Euro sterling is under pressure near term following last week's failure just ahead of 0.8671, the July 2021 high. GBP USD is steady around 135.95, while euro dollar slid for the second day in a row on the back of dollar strength at 115.24. The dollar index is at 94.50.
This is today's market news. Thanks for listening. We'll see you next time.